Investors and traders, welcome to the channel Market Chart Pattern. Today is 28th of December 2023, and I hope everyone is having a great day. In this video segment, we are going to take a look at the US financial sector through the eyes of KRE Regional Banking Index, which includes the smaller regional banks. We'll also take a look at the ETF XLF for the financials, and we'll also cover some of the bigger banking names in the United States. So this video is for educational purposes only, and it is not a financial advice. It's after quite some time that I'm making this video. We were following this regularly, and I just want to quickly do an update on how our patterns were working and what has changed, because a number of things did change. We have seen a really good rally come in the financials since late October, pretty much what we have seen in the broader markets as well. So let's take a look at the KRE Regional Banking Index's daily chart. So what we are looking at is here, right after it found support from this 78.6% Fibonacci retracement, it broke this channel formation, and we had a very nice rally here. And where this rally is, it is forming this one-to-one price projection ABCD here. Let's actually take a look at this on the weekly chart. It's a bit more clear here on the weekly chart. So we can see that here it's completing this one-to-one price projection ABCD pattern right at the 38.2% Fibonacci retracement from all these highs to the recent lows right here. So this is a region that we need to pay attention to, whether whether this index is going to face some resistance around here or not. So we're just waiting for further price confirmation, but it's been a really nice move higher. It's also completing one of the key patterns that we watch for, which is one-to-one price projection ABCD, very close to 38.2% Fibonacci retracement. So there is some good resistance around here. So we are further waiting for price action. Let's take a look at XLF. So this is the Spider Select Sector Fund for financials. This is the daily chart for this. And here, when the market was trading around here, we were watching for this pattern formation highlighted in B and C here. We're looking for a potential move down as low as around the 26.75 and even possibly 25.29. However, that pattern actually changed. Why? Because from end of October, the market has rallied quite a lot, and this point C has been taken out. So I'll just make the change here, and where we are now, let's also quickly take a look at the weekly chart. So there we go. So much like the KRE, the Regional Banking Index, this one is also doing a one-to-one price projection ABCD right around the 37.80 level. So price is really close by, and also the price is a little bit above the 61.8% Fibonacci retracement, and we have the one-to-one price projection completing around here. So we are waiting and watching for this, but the financials have had a really good run, and the one-to-one price projection is something we really look for. So that objective has been met. And now actually let's move to some of the names, such as Goldman Sachs. So there we go. In Goldman Sachs, look, it had a really massive rally from the end of October, and where it is now, it's, you look at these red lines, these are equal moves. So it has done an equal move around here, and last time when it did that, it was, you can see similar kind of a moves, really a quick, really rapid move. Look at this angle of elevation. It's pretty similar, and then the market just went sideways. So here, with the pivot from Fed, things for financials do look better. Initially we were looking for this price pattern highlighted in blue. that it could get to around $240 per share level. But what has happened is that it found support from the bottom of this channel here, this one, right around the 1.27 to Fibonacci expansion, and now it's testing the upper boundary or the upper range of this trading range. And here we go on the weekly chart, so you can see equal moves here, equal moves here. Now it's just testing this level. Let me actually try drawing it here. Horizontal ray, here we go, boom. So we'll have to watch further price action, whether it's able to convincingly take it out this high on a weekly closing basis. We like to see at least a couple of weeks will be a really good indication. Let's take a look at JP Morgan. Wow, so this stock also had a really strong move to the upside. And here a number of things that you see one-to-one price projection in blue, the price is above that. There's another smaller one in brown completing a little bit above that, and it's going to be also very close to the highs it had reached back in 2021 in October. So the stock has done really well. It was in a trading range for a long time around here, broke out of it convincingly, back into it, and then it's completing these patterns. Now let's take a look at it on a weekly basis. So there we go. Stock looks really strong in a momentum perspective. Maybe it's just going to go and test these highs as well. Maybe it takes them out. But this is, and look at this long-term trend line in JP Morgan. It's just, every time the market has, this is going back to 2009, so it's a really long-term trend line. So it likes to come back to this trend line. It didn't quite do that around here, but as long as this trend line is intact, JP Morgan seems to be in a really good shape. Of course, there are going to be retracements, etc., happening for the stock. Let's take a look at the Citigroup. So the Citigroup stock had a massive rally as well. It was one of these stocks from a price action perspective, which was really looking pretty ugly here. And look, I found a bottom around here, a really massive rally. Oversold stock in my opinion, and now it's just doing these. Look at this. This is something which we are seeing in so many stocks, such as Goldman Sachs, and then also this Citigroup is doing the same thing, similar magnitude move right into the top of the range. Maybe on the weekly chart might be a little bit more clear. So here we go. So there we go. This is the weekly charts. Look, it's just a really bearish price action. Look how much supply around here. Just top, and here let's see if it just made any reasonable retracement so far. The stock is so weak, it hasn't even made a 38.2% Fibonacci retracement of these highs. It's just a bear market rally as it appears, just touching the top of this range around here. Let's take a look at Bank of America. Here we go. So the Bank of America, massive rally right from this support zone when it touched this 78.6% Fibonacci retracement, went right to our target. This stock has also made this much move rather quickly. I did a video on the longer term cycles for Bank of America, and I'll put a link to it towards the end of the video. Based on the longer term price action, it's right into just really under, it's in a zone where there is likely to be some decent amount of resistance, and we're just waiting and watching whether it's gonna basically pull back a little bit here, because there are a number of things we're looking at. This market symmetry, last time it had a move of this magnitude and then sold off, so it's pretty much there. The price is just there. and it's right into this zone, 61.8% Fibonacci retracement. We also have this 38.2% Fibonacci retracement in blue and 61.8% Fibonacci retracement from these highs to these lows. So right in that zone there could be a pretty decent amount of resistance around here. And then what we also have got is on a longer term, look at this amazing trend line here from 2012, just really well established line. And then we have these cycles playing out, and what it means is that look at these ABCDs one-to-one price projections, several of them completing around here, and we have seen a big decline here. And here this could potentially be a point C, which means that there could be potentially another one-to-one price projection A, B, C, D, which could in fact take these highs out to the upside. But all depends whether this point C gets the confirmation, and when it takes out these highs around $38.50, then we'll have a pretty good signal that this C, as long as it holds, we could see the stock doing really well. So this is for the Bank of America. Let's quickly do one more stock. Let's do Wells Fargo. Just want to keep the video short. Here we go. So Wells Fargo, initially we're looking at this bearish symmetry, these lines here, because every time the market was rallying this much, we would see a decline. Same thing here with these black lines, but it's just been a fantastic rally. So I'm just going to take this off. Here we go, just make it bigger. And what the stock is doing now is it has rallied quite a lot, but you can see it's not like JP Morgan, which is really close to its all-time highs. So what the stock has done is, in fact, it's just retraced to the 61.8% Fibonacci retracements. Where we go right here. And then what we have is most likely a one-to-one price projection. Here we go. Let me just copy this, paste this here, project it from this low. And there we go. So I think what's happening here is the chart does look a little bit messy, but we could be at a point where there is potentially a massive amount of resistance for the stock, and the reason is we have the 61.8% Fibonacci retracement here. We have the one-to-one price projection ABCD. We have a confluence of two things coming together, and whenever there is a confluence of two or more aspects coming together, we always pay really close attention to that, and usually that is a pretty good support or resistance. And this is looks like it's going to be a pretty good resistance. So far the market has backed off. It's backed off not a lot, backed off about a dollar and a half, a buck and a half from this level. But we'll be watching this, and I'll be doing more regular videos for this segment, just quickly taking a look at it from a weekly perspective as well. So there we go, it did clear these highs out, and of course if we break above the 61.8% Fibonacci retracement, this means that the stock is pretty strong. But just looking at this, it's just not a pattern comparable with JP Morgan at all. It's like a massive decline here, massive rally here. Let's quickly do a retracement. So went above a little bit compared to 78.6% Fibonacci retracement around here. So yeah, this is what we are watching in the stocks for the banks and the ETFs. So thank you very much for watching the video. I wish you good luck and good trading, and speak soon.